Hello friends, this is Raj Sastri from Raj Option Trading. Today is August 6, 2021. I want to talk about a company called GoDaddy. GoDaddy is into software infrastructure. They are known for their domain registration. If you want to build a website, create a website, typically you go to a provider like GoDaddy for your domain registration and also for your web hosting needs. So with that, let's get started and look at GoDaddy here. So according to Glassdoor.com, so GoDaddy has a nice rating here. As you can see, a 79% approval ratings for the CEO. That's a very good achievement here. Aman Bhutani, he's a seasoned leader. I think he can take the company in the right direction. So with that, as you look through the numbers here, I think GoDaddy has got a very good addressable market here, $180 billion, and they got Dream, which is domains, $5 billion addressable market. Create online presence, they got $50 billion market opportunity here, and also in the marketing e-commerce, they got $180 billion market cap. So this is why they have very good market opportunity as you go forward. I think this company can take advantage of this total addressable market, which is very large. So with that, as you look at the Q2 results here, they have 13% year-over-year increase in bookings, 15% year-over-year increase in revenue, and also nice free cash flow, as you can see here, 27%. So overall, the results were good, but Wall Street did not like it. That's why stock dropped. So with that, as you look through here, from a global footprint perspective, these guys are into 100 plus countries, $1.2 billion run rate, and also 50 plus markets. And I think they've done nicely from an expansion perspective, from a 266 million to 317 million in the global expansion. So I think they've done great, from a global footprint perspective. And international revenue grew 19% year over year. That's a good achievement here. And if you look at the company's background here, GoDaddy uh, engages and designs and develops cloud-based technology products. Company is known for domain name registration product, and they're also into initial stage of establishing identity. That's a good business to be in. And they also offer shared web hosting products, and also they got suite of tools designed to help secure customers online presence. So it's a known name. A lot of people in the industry uses GoDaddy. I think it's a great company. So right now stock price is $73.12, and the market cap is $12.26 billion. As you look through the stock chart here, I like these type of stock charts. Stock goes up, down, up, down, up, down. Overall, if you invest in this company, anytime the stock is down, you always made money. Very predictable, especially around the earnings. This company is known to go down a lot. It's always a good opportunity in the past. So as you look through the CEO here, we got Aman Bhutani. He's got over 20 years of experience. He's been at the helm at Expedia and JP Morgan Chase, New York Times. So he's a seasoned leader. He knows how to take the company forward. And main news here is really GoDaddy Q2 earnings miss. Revenues outpace estimate. They did good on the revenue side, but on the earnings side they missed it. That's why stock dropped. I think it's a good opportunity to jump in and buy some GoDaddy at this time. And they got some okay type news here, as you can see here. Nothing great. I think big news is around GoDaddy Q2 earnings miss. So with that, let's jump in here and look at the competitive landscape here. So as you look through here, we got a lot of great companies. I love many of these companies. As you scan through here, we got DigitalOcean. It's a newly minted company. As you can see, it's done okay from a performance perspective. 11%, 8% in 2 weeks, 2% in 1 month. I would buy DigitalOcean on any drops. It's a great stock to buy. A nice gross margin. Then we got Squarespace, same story. It's done okay, nice. Software gross margin 85%. Stock has been falling off in near term. Could be a good one to buy. Through this drop here and accumulate slowly. Then we got my favorite company, Cloudflare, ticker symbol NET. Great performance. Out by this company on any pullback, this will do great. And same is the story with HubSpot. I love HubSpot. It's doing great, as you can see here. And right now, net revenue is negative, but companies are really growing nicely in the CRM space. Great performance all across the board. 1 year 185%, 5 year 1064%. And then you got a couple more here. Bridgeline, again, same story. I think they've done great from a growth revenue perspective and sales growth perspective. Now it's okay sales growth, not great. 1% and 5%, nice gross margin here, and net revenue is negative, as you can see here. And this company, I think they've been dropping off late, as you can see here. RSI is 48. This one I think you can buy slowly into the weakness, along with the Squarespace also. It's just 39 from a RSI perspective. And then you got bigger players here, Shopify and Adobe. As you can see, these are great stocks. Right now, RSI is 57 and 72 respectively. Out by Shopify and Adobe on any pullbacks, and take it from there. And then we got here Amdocs. Amdocs is again a steady Eddie type stock. It's okay sales growth here, not great, single digits as you can see here, but gross margin is good. And stock has been dropping off late. I would buy some Amdocs at this price here with the RSI 34. And then you got Tucows, $78 stock, negative sales growth, as you can see here. Okay gross margin. Stock has been falling off, as you can see here, and RSI is 40. That tells you it's okay to Tucows. RSI 33. That tells you it's okay to enter slowly. And we got a couple more here. ECOM Akamai VeriSign. All of these have got great sales growth here, as you can see here, and RSI is also pretty respectable. I think we should buy some of these companies. I love Akamai at these levels. Akamai, stock dropped on the earnings. I think it's a good one to buy into this weakness and hold for a long time. As you can see here, Akamai has been dropping in 1 week, 2 week, and even 1 month time frame. I think it's good to buy Akamai into this weakness. And same story, VeriSign, almost similar thought process here. I would also buy VeriSign into the weakness. And next is our stock that we'll deep dive into. GoDaddy, $73 stock, has been dropping, as you can see here. RSI is 43. I would buy some GoDaddy here into this earnings weakness and take it from there. And we got two more here, Wix.com and VirnetX. And Wix.com, as you can see here, RSI is 50, positive quarter-over-quarter growth, and net margin is negative. And stock has been dropping off. RSI is 50. I would buy Wix slowly and accumulate. And then you got here VHC, very low dollar stock. Right now sales growth is negative. I would watch out. If you want to buy, buy slowly. Don't back up the truck, mainly because RSI is negative. So I would watch out slowly. We'll now go into GoDaddy into little more details. As you can see here, after the earnings, stock dropped. What do you expect? So these analysts come in and downgrade business as usual. They take down the expectation from 110 to 85, 100 to 85. That's a negative bias. So that's why earnings miss, coupled with the couple downgrades here, stock dropped. And as you see here, from an earnings per share perspective, it's negative. Companies not making net profit yet. And as you see here, sales is nice. I love this sales clip here. This company is doing great from a sales perspective, and shares outstanding is pretty steady. Nothing to alarm here. And from a fundamentals perspective, company is doing nicely. Positive 1 year quarter-over-quarter growth, nice gross margin. does not still beat rule of 40 where gross margin is and plus quarter over quarter greater than 40, but I think this is one of those steady eddy stocks. It may be okay here. Nice net margin, 65%. That's a good net margin to have. And stock has been dropping off as you can see here due to this earnings miss, and they've done nicely from a 5-year perspective, 130%. So you could still make money over the long term with this stock if you keep buying it at the lower price after these type of earnings miss. And from a fundamentals perspective, nice trading volume. It's very liquid. You can get in, get out. Nice cash. They got $1.2 billion cash, and they also have a lot of debt, as you can see here, $4.1 billion debt. That makes their debt to equity ratio a little higher. So I would be a little careful on the debt side of the house, but I think they can manage this debt here. They've been spending money on R&D. That's always a good story. They want to really churn out new products and make their platform compelling. That's one thing I saw with this company, with the CEO Aman Bhutani. He's focused on bringing new products to customers. I think that innovation engine is always humming. That's a great story. And this company is below their 20, 50, and 120-day moving average. I think that's why it's a little bit bearish at this time. Good to step in and buy some stock here and get ready for upward momentum. So with that, let's jump in here. As you look through the fundamentals here, I've got here multiple quarters, as you can see here, all the way to 2018. And we also have the recent quarter, which is just a couple days ago. Announcement happened. As you see here, nice looking growth here from a market cap perspective. That tells you it's very steady eddy company. You don't see huge growth spurt here, but pretty steady eddy. $11 billion back in 2018. Right now, $13 billion. After the drop, it's $12 billion. So it's one of those companies pretty much goes along with the trading range and goes up and down. Nice trading opportunity with this stock. It may not be a stock for your retirement portfolio, but you can always trade this in and out because there is a lot of opportunities, trading opportunities with this stock. As you look through from a price perspective, $65 back in 1231. It's really up and down. 65 again here, 930, 19. Basically up and down. Slowly drifts higher, but nice trading opportunity here. A sales perspective, they've been doing pretty steady eddy, as you can see here. Nice sales acceleration. I think they've done nicely. Sales growth is also good. I like this sales growth, double digits, steady eddy. And revenue surprise. They've been surprising Wall Street with the revenue upside here over the last couple of quarters, as you can see here. Couple misses, very back in 2019, which is great. Wall Street loves predictability. From a revenue surprise perspective, it's very predictable. And from a earnings per share perspective, I think they are doing pretty nicely. Last couple of quarters is positive earnings, at least earnings per share perspective, it's positive. And EPS surprise. This is where companies a little bit, not so predictable. They've been negatively surprising on the earnings per share side. That's why stock did not do great after the earnings. And they got a lot of cash, as you can see here, $1.2 billion cash, and they also took out a lot of debt. This is one thing to watch out. By looking at this company, they've been taking out debt all along, but it's increasing right now. So this is one thing I'll be careful. But right now there is a low interest rate environment. It may be okay, especially companies making money. They got free cash flow. That's why I'm a little bit okay, not too much concerned, but I would watch for the debt here. I don't want this to go higher, much higher. They got positive operating cash flow, nice gross margin. I love this gross margin. And they also a net margin. Companies making money and spending a lot of money on R&D. I love companies spending money on R&D to build out their platform, make it more compelling. And from a ROA, return on assets, return on equity. ROA is negative, and ROE is positive. I would love to see even ROA positive, especially maybe single or double digits. So price to sales ratio perspective, company is still very cheap or inexpensive. So overall, by looking at these fundamentals, I think this company, anytime it drops like this on earnings, always a good trading opportunity. Long term, company goes higher slowly, drifts higher, but short term gives tremendous opportunity for trading. So with that, let's look at the performance now. On a yearly performance perspective, company have done great in the past. Not superb, but great. They've been giving positive performance all along. Right now for 2021, it's negative with this huge earnings drop. And if you look at the monthly performance here, nice color here, down and up, down again in March, up. So it's really, it provides you very good trading opportunities. Right now it's down in July and August after the drop. This is a great trading opportunity with stock like GoDaddy, which is known to bounce back after crash like this. For example, here 2 consecutive months drop, nice bounce back here. 2 consecutive month drop, nice bounce back. So this is what you can expect from this stock. This will bounce back nicely from these levels. And then we got here weekly performance, something similar here. Any drop you got, nice bounce, drop, bounce. So same story here. They got here 2 weeks of drops. This will be followed by nice bounce as you go forward. And then you got daily performance, earnings miss, huge drop, 3 days of down red here. So I'm sure company will do nicely and bounce back from these levels. So overall, I feel confident by looking at this company's history. They are known to bounce back after these type of crashes. Next, we'll look at the monthly performance pattern here. It kind of tells us what to expect. From a yearly performance, company has done nicely, as you can see here. Not great, but has done nicely. You can see a lot of greens here. But with the stock like GoDaddy, it's not about your yearly performance, but it's about the trading opportunity the company gives. So as we see here, you can see January, typically there is some little bit downtrend here, and bounces back nicely. March, there is a little bit downtrend, last 2 years, bounced back. May, a little bit downtrend, bounces back. So it's very predictable that way. Whenever you see some drops here, 2 drops, 2 month drop, nice bounce back, 2 month drop, nice bounce back. Very predictable. That's why stocks like GoDaddy, when they go down on the earnings miss, you can always buy some and wait for a month or two and get a nice bounce back and a nice profit potential. Next, we'll look at a 5-year weekly chart of GoDaddy. As you can see here, somewhere if you start looking at here, 2018 October, big drop after the earnings, then stock took off and went back. And one more earnings here in April 2019, stock dropped like a rocket or a rock, and then it went up. One more earnings, stock went up. Earnings, stock dropped, big, went up. So very predictable. Right now we are here in August, big time drop. So this is where, as you see here, by looking at the history, it tells you, hey, you know what, this is a great opportunity. You can buy this drop and it always bounces back. That's why I'm confident this time it's nothing different. It's something similar to what happened in the past. So now let's look at a 1 year daily chart that tells you a little bit nearer term what's going on. Similar trend here. Earnings, stock shot up. Earnings, stock shot up. Earnings, stock dropped big time. Earnings, stock went up. Earnings, big time drop. So very predictable here. I think if the moment it drops, now it's good time to pick up slowly, and it will always show upward momentum as you go forward. From a chart perspective, nothing superb here. After stock crashes, chart always looks ugly. RSI is trending down, and DMI very ugly, red line shooting up, uh, blue line shooting down, very bearish at this time. On the balance volume is negative, and check-in money flow is really showing some momentum here. Smart money knows this type of forecasting, and they basically jump in, buy. As you can see here, I think this is a good time to buy along with this big institution. There is some uptick in the check-in money flow, tells you smart money is slowly moving into the stock and buying a nice position here. So with that, I would recommend buying GoDaddy into this weakness and hold a nice position. Next, we'll look at options market and see what option market is predicting. As you see here, stock price is $73, and if you look at the 72.5 strike price here, you see nice okay type open interest here, a lot of positive open interest all the way to 105, 110. People are betting this stock might go to 105 and 110 by November 19. And on the put side of the house, I think there are some put option volume here, not great. So call option volume more than put option volume. That tells you, in the option market, people are betting this stock will go up. Now we look at option statistics. So as you scan through here, total contract traded 2.4 thousand, and total put traded 1.1 thousand. So that makes the put call ratio 0.4, much below 1. So that tells you in the options market, more people are betting stock will go up, even though there is not huge volume from an open interest perspective, but still it's from a outlook perspective, there's a very high degree of confidence this stock will go up by looking at the statistics here. Next, let's look at the earnings result here, earnings transcript by CEO Aman Bhutani. Earnings per share, they beat by 4 cents, and revenue, they beat by 11.4 million. I think still they did not meet the expectation. That's why stock dropped big time. So it looks like the CEO is doing the right things. They're committed, through this bold innovation, and they have more than 20 million customers, as you can see here, and their priorities are aligned with the customers, and they're really driving the commerce through presence. They're churning out a lot of new products and innovation. That's why I like this company. They're not keeping quiet. They're innovating, bringing out new products constantly. And they're also helping the everyday entrepreneurs and helping them to grow their business. They got various things like GoDaddy payments and websites, and marketing customers with the WordPress. They got multiple of these tools here to help these everyday entrepreneurs. And they're also launching GoDaddy Pay links that will help to say goodbye to paper invoices. And they got more and more products coming through their innovation pipeline. And they're also partnering with Google and Facebook, and GoDaddy customers can now display their product offerings directly through Google search, Google shopping, image search, and so on and so forth. I think that's a great partnership here. Company needs these type of partnerships to really grow. And they had a good Q2 quarter, and I think they did well. They grew over 15% year over year perspective. That's a good revenue number here. And they also had fastest growing product line, which is business applications, up 22%. And they also had a hosting presence, up 9%. And they finished with $1.4 billion cash and total liquidity of $2 billion. So overall, I think numbers are looking good. Company is doing the right stride into really helping the customers, churning out the new products, but they missed the consensus estimates. That's why stock came down a little bit. I think it's a buying opportunity here. So with that, from an insider selling perspective, nothing great here. I think as you can see here, they're not selling too much. This is something that folks need money. They will sell some, not a big deal, not in huge millions of dollars. Insider transactions is 13%. They've sold some, but not great. I've seen much bigger insider sales. And what do you do now? GoDaddy stock dips after profit miss, soft sales forecast. That's why stock dipped. Stock slips 12.43%. I think after the market closed, it also slipped a little more. I feel like at this point we can jump in and buy some and hold. The revenue was up nicely, 16%, topping the estimates. And also total bookings were up 13% to 1.5 billion. Domain sales increased 18%, and Q3 forecast fell short. That's why company stock dropped. Full year sales forecast about 3.75 was in line. I think it's really the Q3 sales forecast because it came down tad low. That's why stock dropped. Historically, by looking at the chart patterns, we looked at fundamentals, we looked at technicals. Historically, whenever the stock dropped like this, it's always a good opportunity to buy. It always bounces back. So with that, I feel like, hey, this stock is oversold right now. I would jump in and buy this stock. This stock always gives you great trading opportunity. Wait for a month or two, stock bounce back nicely. You can take some profit and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.